Hello everyone, welcome back to the next session as a part of primary ledger setup for the implementation project. I am Amol here, Oracle functional expert. So before I begin, I would like to say that it's promising to see that so many client end users and project consultants finding my session valuable and asking for more such insights. So today's session is designed to be deeply insightful and value packed. So it may be a bit lengthy. I truly appreciate your patience and thank you in advance. I assume that you already have watched earlier sessions on my channel for rapid implementation spreadsheet task, which creates the foundational ledger setup. That means the basic configurations such as ledger creation, chart of account, structure, instance, accounting calendar, primary setup data already defined and uploaded. Now we are going to cover specify ledger option settings, which are very important because they control how accounting transactions behave across general ledger and subledger models such as payable, receivable, assets, etc. So in this session, we will understand how general ledger manages accounting period, currency translation, general processing, balancing and reconciliation option, intercompany accounting, general reversal and approval, average balancing processing, and lastly, document sequencing and compliance control. So let's log in into application. So I have I'm using the username uh, implementation consultant, financial implementation, and password is already entered. I just click on the next. So let's get into application. And meantime, we are going to search for the ledger where we are going to review each and every options available for ledger. Then to get into a specified ledger option, we have to go through a functional setup manager, and for that I have to right click on my user name, and there I find setup and maintenance. Also, you can navigate through this hamburger menu through which my enterprises you will find the same, and it takes to same page. And let's go there, and here we come. So since this is the financial setups, we have to ensure that the financial is selected, and then we are going to specify ledger options. So we have to go for general ledger because it is a part of the general ledger module. And here on right hand side, you can see the task available for that specify ledger option and the scope. Scope is a ledger for which we are going to do the option, a ledger option. So I click here on Financial Services US Primary ADB Ledger. So I have chosen this particular company because it has average balance enabled, because many people, consultant, end users have uh, questions around why the average balancing is enabled in certain companies. So we already have searched the ledger, and we have found the ledger name Financial Services US Primary ADB Ledger. So here what we're going to cover up is go one by one. So let me collapse everything. So you get to know how many options are there as part of ledger, specify ledger option. So all of them we are going to cover in detail, right? And in here, if you see, firstly, the general information. There you can see the ledger name itself, and it comes with a star. So this field is mandatory. Okay. So whatever you see with asterisk mark, these are the mandatory fields. You have to fill data information into it to save and create that setup. Okay. So throughout this session, we will understand each and every option in simple business term with a practical example, so that both functional end users and implementation consultants can clearly understand the purpose and impact of each configuration. And like I told you, all mandatory options comes with arrest risk. So if I go here in calendar, there is also one star here, arrest risk. Uh, so this field is mandatory. You have to fill the date, right? Likewise, we are going to cover each and every option. So firstly, the ledger name is displayed here. Okay. Then the currency it is using. So it is a US based company. So currency is USD. Okay. And then chart of account is financial services chart of account. Okay. Already created. Now, before we start to enter and see all the setups, uh, if you're doing this implementation for your own client as a part of an implementation project, ensure that the dynamic insertion is enabled as a part of practices which are applicable to your specific project, because sometimes they are enabled, sometimes they are not, depending on the scope and confidentiality and the accurateness of the code combinations. So if the combination dynamic insertion, okay, if enabled, the combination are created dynamic. Okay. So as and when you choose certain code combinations here to define your retained earning account, cumulative translation adjustment account, they become available immediately if it is already checked. So you can, as a part of project, you need to temporarily turn this dynamic insert on and off according to your, requirements and standards you follow, project quality standards specifically, and simplify the setup activities. So after completing this ledger configuration, okay, you can turn it off. I mean, once the project is over, and then people should not, and the end user should not end up creating unnecessary code combination accidentally, and so we have to put it off once implementation is done. So based on the client business control requirement, you can seek that clarity and tell them. So in summary, what we are going to cover up here is ledger option, which defines important accounting behavior and defaults, and then mandatory fields which mark with asterisks. Okay. So we have just covered the ledger, because ledger is a combination of forces: chart of account, calendar, currency, and accounting convention. So first information is pretty much clear, because this is already covered as part of earlier session in rapid implementation spreadsheet. So I close this now, and let's move on to calendar. So what you see here in calendar is calendar name, first open period, and the number of future enterable periods. So what does it mean? Now, this calendar defines all the accounting period, such as monthly, quarterly, weekly, whichever calendar type you have chosen, okay, for your business uses of your financial transaction you have defined during initial setup. Then we have to carefully select the first open period for the ledger. So this period has to be carefully chosen during implementation, because once first period is open, we cannot reopen any earlier periods. So we should avoid selecting the very first period defined in the calendar. If the business plans to use foreign currency translation, meaning if this system does not allow translation, because very first defined period of the ledger calendar. So I repeat what I want to say. This is because system does not allow translation to run in very first defined period of the ledger calendar. In simple terms, translation cannot run in initial open period. Earlier period cannot be reopened later. Means earlier period means whichever period you are going to open up, and if you have some periods even before that, you won't be in position to open them. So The first open period must be selected carefully, okay, during implementation. After that, we define the number of future enterable period. This setting controls how many future accounting period user can enter journals into before those periods are officially open. For example, current open period is May 2026, and number of future enterable periods are two. Means if we can change this anytime actually. If you keep it two, which means I can enter data. In this case, I can enter data in June 2026 and July, means next 2 months. May is current, June and July become future enterable. Okay. So why do we use this? So user can create journal entries in this period and save them in draft status. Okay, draft. However, they cannot post those journal until the accounting period is officially opened. Means you can enter journals in future enterable periods, but you can't post. One important point is that this setting is flexible, means the business can increase and decrease this number. I mean, any point of time, if you have a business requirement where you have to enter future enterable journals for next 4 months, so you can change this number any point of time. This is not strict and mandatory that this number can't change. So this is quite flexible. So according to your operational needs, you can change this, right? So this is done. So we have so far covered journal information and then accounting calendar. Now we are going to go for subledger accounting. So what is subledger accounting? So you have to choose accounting method and journal language. So what does it mean? These settings represents the accounting rules and regulation that client company follows on its business requirement and country specific compliance standard and accounting standard. So Oracle uses a powerful feature, means the mechanism, accounting engine, it used to be known in Oracle, that is called Subledger accounting, also known as a SLA, Subledger accounting. So Oracle Subledger accounting provides flexible accounting engine that defines overall accounting rules for transaction, which automatically generate detailed accounting entries from subledger modules like AP, AR, cash management. It also transfer and post those entries to GL, which help maintain the clear audit trail for financial tracking and compliances. Okay. So in simple term, SLA means accounting method. Okay, this accounting method act as a bridge between the business transaction and accounting entries. So when an invoice is created in payables or receipt is created in receivable, subledger accounting automatically applies the accounting rule which are defined to debit certain amount and credit certain amount, and it generates correct journal entries before sending them to journal ledger. So here, if I click on this option, there are many accounting methods available, and you can have your customized accounting method to be selected once you modify according to your country specific localization. Okay? And you select appropriately. For this specific company, financial services US primary, this is the one which has been customized to the localization of that country. And then the next part is general language. So the language why we select here is this setting controls the language used for the journal description in the system. Means system gives flexibility in how journal description are displayed. So description can appear in ledger journal language, or they can appear based on the user session language of that specific user who is logged in that system or that session. So why this is there? This general language is to help multinational companies which has a presence across multiple continents support end users working in different languages while maintaining a consistent accounting data, right? So that's all for Subledger. Now, so far we covered three options, and now we are going to go for period close. Now here in the period close, what you see is we define return earning account, which is a mandatory setup in the ledger option. Like I said in the beginning, the asterisk, these are the mandatory fields. Okay. So this account is used during year-end closing process. Why do we use it? Because at the end of the accounting year, Oracle General Ledger automatically transfers the balances of all revenue and expenses account into retained earning account. Okay. In simple terms, revenue account shows company's total income, expense account shows company's total cost. Okay. After year-end closing, these temporary balances are cleared. Okay. Why? Because the net profit or net loss is moved into retained earning account. So we create retained earning. So this helps companies carry forward the accumulated profit and loss into next financial year as part of company's equity. Along with that, if you see, the next option is cumulative translation adjustment account. So why this is there? This account is mandatory for ledgers that use foreign currency translation. I mean, not conversation. Okay, there is a difference between conversation, translation, and revaluation. So what we are covering now is translation. So companies that operate in multiple countries often maintain, accounting records in one currency and later translate financial statement into another currency for reporting purpose. So during this translation, different account types may use a different exchange rate. For example, asset and liability may use one translation rate. Revenue and expenses account may use another rate. Likewise, equity account may use a different historical rate as per the accounting standard and that country specific, localization needs, management needs. Because these different translation rates, the translated debit and credit balances may not match exactly after that translation. Means when we are using different rates for asset and liability, revenue and expenses or equity, the translation rate creates the difference, right? To balance this accounting entry, system automatically posts the exchange of that translation difference into cumulative adjustment account. This is purely for management purpose. So in simple terms, the cumulative translation adjustment acts like a balancing and clearing account for currency translation differences, and it ensures that total debits and credit maintain equal after credit remain equal after translation. Okay. For example, ledger currency is in INR, Indian rupee. Company translate report into GBP or USD, American dollar. So now, due to varying exchange rate, a small currency differences occur. In that case, system automatically posts these differences into this CTA account during translation process. So whenever translation is run to convert one currency into another currency, any exchange gain or loss, or maybe not, let's call this gain and loss. This is are the differences because this is just purely translation. Okay, they captured into CTA. Now next option we have is net closing balance journal. So what is it for? And there is this checkbox. Okay. Now this setting controls how system create the year-end closing journal entries during financial closing process. What does it mean? At the end of the accounting here for this net closing journal, companies run a process called create income statement closing journal. Now this process closes all the revenue and expenses account and translate the final profit or loss to retained earnings. If the net closing balance journal option is enabled, means if this option is enabled, okay, General Ledger creates closing journal using a single net amount instead of creating separate detailed closing lines for each and every revenue and expense account balances. So number of transaction or lines may increase in that case. So in simple terms, General Ledger calculates the overall net profit and net loss, and then it creates one summarized closing entry using net value. Okay. For example, if you have a total revenue of 1 million and total expenses of $700,000, then net profit is going to be $300,000. Means 10 million minus 700,000 is $300,000 net profit. So in this case, instead of creating detailed closing lines, General Ledger posts one summarized net closing entry of 300,000 to retained earning account. So this option helps keep year-ending closing journal simpler and easier to review. So if you check this is what happens. Okay. Now next we cover is default period end rate type. Okay. Then default period end average rate type, revaluation gain and loss by multiple segment, then prevent general ledger period closure when open subledger period exists. So what does it mean to have a default? Wait, okay, default. These are the options we are covering, so I just highlighted. These settings are mainly used for reporting currency processing. Means when you have reporting currencies defined to your primary ledger, these rates are used for reporting purpose of foreign currency translation. So ledger uses these exchange rate types to decide which currency conversion rate should be applied during translation. Means translation rate basically for reporting activity. This setting define which exchange rate system should use by default during currency translation and reporting. So this will come as a default, but if you want to change it because something had changed, law changed, a management had changed the approach to recognize translation, you may come up with a different rate when you actually run it. But this will come by default. Does not mean you mandatory have to use these rates, but it will come by default to avoid any mistake. If you have strict policy that these are the rates which are controlled by the headquarter and they update in your ledger, that's the rate you should use it, kind of. But we are understanding why these setups are there in ledger option, how they're useful in your day-to-day operational activities as a part of financial transaction. So it helps ensure consistency across financial reporting for multiple currency. So most commonly, period end rate is used for balance sheet accounts such as assets and liabilities, and period average rate is used for profit and loss accounts such as revenue and expenses. Okay. So General Ledger also supports different reporting currency processing methods. So which are balance level reporting currency and then subledger level reporting currency. So based on the setup what you have for your reporting currency, okay, you can use. So for example, if your company uses subledger level reporting currency, then currency conversion or that translation can happen at subledger level transaction level itself. Okay, so that payable invoice itself transaction, translated. Now, next we have is feature called track valuation gain and loss by multiple segments. So this option, this is optional feature means what? This is added on. If you want to enable it, you can go to that setup and choose to make it available as part of opt-in feature. Okay. Normally, when general ledger runs the foreign currency revaluation, the system creates gain and loss accounting entries at summarized level. So now we are talking about revaluation. Okay. Earlier, what we covered is a translation. Translation is purely for reporting purpose, and you can have different exchange rate for your assets and liabilities, income and expense and equity. But now we are talking about a real-time gain and loss of revaluation means you have already dealt with some foreign company and you're dealing with a foreign currency, and then by having that transaction into foreign currency, you have certain realized gain and loss. How do you want to track that? Okay, so now in Fusion you have this option available that you can track your gain and loss by multiple segments: cost center, your department, your division, by company, by business unit, and product line. Okay, these are the various segments you may have, and you can track the foreign currency gain and loss accordingly. So with this feature, you know we can create detailed revaluation entries by segment, giving more granular financial reporting instead of just summarize entry for the whole company or that specific segment. So we are covering whichever level at granular level you want to track. You have this option now available, which you can opt in and go ahead. Now next we have the option called prevent journal ledger period closure when open subledger period exists. So what does it mean? This control helps companies maintain proper period in accounting discipline and prevents accidental closure of the general ledger period. So when this option is enabled, system checks status of sub ledger module, like payable, receivable, before allowing general ledger period to close. For example, system itself verify whether modules like payable, receivable, asset, cost management still have an open period or incomplete accounting transaction. So in simple term, GL period cannot close until required subledger level module transactional activities are properly completed. This ensures the accounting completeness, reconciliation accuracy, and period end activities, and better financial control during the month-end closing process. So that's all for your period close options as a part of ledger. Okay, and now we are going to move towards sorry. Now we are going to go for the next option is that is general processing. Okay. Oh, wait. Okay. Let me yeah. So this so we don't have any confusion. So I'm going one after another. Okay. So here you see as a part of general processing ledger options. Okay. You have one side is balancing, another side is entry. Okay. And here you have number of options and you have another list of options. So here we are going to talk first about balancing related settings as part of ledger option. So in general ledger, one basic rule is very important, which you also agree. A journal must always balance before it can be posted. So it should tally. Both the debit and credit amount must match. Okay, that's what the balancing means. I just highlight this area right now since I'm covering this part. And these settings help system ensure that journals are always mathematically balanced, properly controlled, especially when the difference occur due to rounding, suspense handling, and currency differences. If you see here, all the options which may create imbalance while entering journal or recording transaction at subledger level may consider certain option to strike a balance by doing certain setup like enabling suspense at GL level or subledger level, then having default suspense account, rounding differences, okay, then enter currency balancing account, then balancing threshold percentage, and then balancing threshold amount. Okay, so these are the all the options. Even require a manually enter general balance by currency. So we are going to cover each one of them one by one. Now here this option, what does it say? What happens if the journal is out of balance? If the journal is out of balance, system does not immediately reject it. So what it will check? Instead, it checks based on this setups what we define over here, and there are other setups which we have to have at subledger level, at currency level, at rounding level, all those setups. It checks first what setup we have done, how it can balance itself. There are little changes or fractional rounding of differences, how system should handle instead of rejecting transactions straight away. So it creates balancing line automatically and adjusts the existing journal line to make entry balanced. So this depends on how balancing options and account like this one is on screen, suspense account and rounding off are configured. So how the configuration setting decide what to happen and what to do next. The posting process checks the nature of differences. So when you select one journal entry or select number of journal entries to be posted at ledger level, it checks if the small rounding differences, if there is a fractional rounding differences, it may go to rounding account. If the it is a balancing issue, it may go to suspense account. Means it's beyond threshold, and then still entry is not getting balanced, so there is some suspense, means nobody know about this where this account should hit right now. In that case, we can put those entry into suspense account. If the valid balancing segment issue is there, then ledger may generate balancing line. So there are three different scenarios as given. You may have different scenarios, but these are the scenarios we mostly face during the different business use cases when we gather information from client. So based on that, we enable the suspense account, okay, at subledger level and the subledger level. And then when we enable the suspense, ledger allows system to temporarily post unbalanced amount suspense account. And then when it is used, a journal is not fully balanced due to setup issue or data error. The system needs temporary holding account, means it is temporary balance out using a suspense account. So basically, suspend account acts like temporary, parking account, time being for differences of that balancing until they are corrected. Means now you don't know, but entry needs to be posted, counted. Okay, so default suspense is used by system where it will post any balancing differences when suspense accounting is triggered. So you need to have this setup enabled first here at ledger level, and then subsequent setups are there to be done. Now let's cover the rounding accounts. Okay, the rounding account, this account is used to record a very small differences that occur due to currency rounding. Okay, so when conversion currencies and value may differ by a few cents or paisa, okay, then instead of blocking the journal entry, ledger posts the small differences to rounding off. Okay. Now second is entered currency sorry, the next option is enter currency balancing account. Now this account is used when transaction is entered into foreign currency. So when debit and credit don't balance in entered currency due to currency handling rule, ledger uses this account to balance entry. So you define this account if it is applicable. Now balancing threshold percentage and amount here. Okay, one is for percent, how much percentage threshold you want to give, 1%, 0.01, 0.5, and then you can also give the amount limit itself, up to $5, up to 10 rupees, whatever currency is applicable to you, you can mention. So threshold percent allows small percentage based on the differences, and threshold amount allows small fixed value differences, like I mentioned. So system automatically balances journals using these accounts. Now, if it exceeds the threshold, the system will stop journal and require correction. But if the imbalance is within the defined threshold, okay, in that case, system will automatically post the entry. Now next, we have option of require manually enter journal currency. What does it mean? This specific thinking to journals, okay, that are entered manually, either through create journal screen, means in journal ledger itself you manually enter the journal, or through Excel spreadsheet upload. What this setting means is all debit and credit entries in the same currency must match. That's what require manual entered journal to balance by currency. Okay, now next we review some important journal processing option available in journal ledger. So what is that? So when journals are entered, validated and managed in the system, okay, they are accounted for what currency it is being recorded into. Right. Now next option is here on the right side hand. Let me, yeah, here. So here there are check boxes which are available, and first is enable journal and manual subledger entry approval. So what is this? Now this, by checking this option, you enable the journals must go through the approval workflow according to your hierarchy and the amount limit and all, as per your company's approval matrix. Okay? So before any journal entry is posted, it must be approved. So in simple term, a user creates a journal, but an approver must review and approve it before posting. For such business scenarios, you have to enable this checkbox. And then there are rest of the other workflow settings, many setup has to be done. But first main setup is at ledger level. Now next is notify when prior period journal is entered. This option alerts user when they enter a journal with the date from prior accounting period. So what does it mean? If your current period is May 2026, user enters journal dated April 2026, means last month. System displays a notification and warning to user, and this helps reduce accidental posting into older period. This is applicable when by chance you have a practice where as soon as a next period is open and you open up even the last period for certain adjustment entries, and there is a some windows of adjustment which has to be done. In that case, end user might not know it. Okay, so in that case, they at least get an error to prevent them by entering entry into last month. So this will notify them if you check this box. Then allow mixed statistical and monetary journals. So what is this? This option is very useful, and by clicking this, journals can contain monetary amounts, which are currencies, and they can also use statistical amounts. So within the same journal line, statistical amounts which are non-financial values means number of employees, head counts, units of production, square footage in case you are paying the rent for various departments, okay, then machine hours, right? Such entries does not have direct impact on debit and credit amounts, but they have statistical measures. So that can be tracked when you enable allow mixed statistical and monetary journal option. This is useful for reporting even when we do allocation of expenses across different cost center. This is very much useful. Okay, and even it is useful while you do different operational analysis for management reporting. Now next option is validate reference date. Now this setting requires user to enter a valid reference date which falls in an open period or future interval period. So what does it mean? This means the reference date belongs to a closed period. Okay, if the ledger prevents journal from being processed, this helps maintain a proper accounting period control and date accuracy. And now next option is the journal single currency. When this option is enabled, journals entered through a create journal page can contain only one currency. I repeat. So when this option is enabled, journals entered through create journal page can contain only one currency. For example, one journal can contain only one currency line. It means if it is INR, only INR. If it is USD, US dollar, American dollar. If it's GBP, it's pound, pound. Okay. Now, mixed currencies in same journal are not allowed. However, to use this functional, uh, you know, uh, checkbox, we need more additional setups at general source level, which I will not go into right now since we are just covering the ledger options part. Okay, so there are certain general source level setup also has to be done before you use this option uh, if it is applicable for that specific client business needs and transactional needs. Okay, now next we cover additional general processing and reconciliation options. So down here now we're talking about reconciliation and the import. Now enable reconciliation. So when this option is enabled, it allows journals to participate in journal reconciliation process. What does it mean? When you want to go for automatic reconciliation, clearing account reconciliation, and this reconciliation helps companies account compare the and match the accounting transaction to ensure the balances are accurate. For example, intercompany reconciliation. For example, clearing account matching. Okay. So when you enable this option over here, okay, then clearing account reconciliation, which are used to hold various accounts during transaction processing. Like it could be, for employee salary processing, payroll clearing, you may have one account for as a part of clearing account reconciliation. Then you may have cash clearing account for reconciliation, bank reconciliation. You may have suspense clearing account for unknowing transaction accounts, which you may want to clarify later towards month end as you have more information available. So this option has to be checked if you want to use all the clearing account reconciliation. Now, next option under import is separate journal by accounting date during journal import. So what does this mean? Now, this option applies during journal import processing. When enabled, system creates separate journal entries for each accounting date instead of combining all transactions into one journal entry. So, a separate journals by accounting date are created. So, this process organizes imported journals date-wise for better control and reporting. For example, if the import data contains transaction dated maybe 1st of May 2026 and there is another transaction dated 5th of May 2026. There are two transactions. One happened on the first, second happened on the May. So system creates one entry for May and one entry for 1st May and one entry for 5th May. So instead of merging them together, it creates one summary entry when you import. So since it is a part of import journals into GL. Now this is done. Now we have finished this part and now we are going to cover intercompany and reversal. Okay. So what is this options available for? Now this feature means enable intercompany accounting option, which is here. Okay. Once you click here, it will be enabled. I will not enable. I'm just going through it. This feature is used when transactions occur between different companies, legal entities, and balancing segment values within the same company. Okay, those transactions are known as the intercompany transaction. So this intercompany accounting happens when one company transact within another company, okay, under same organization. Okay, so when this option is enabled, system automatically create balancing accounting entry for intercompany transaction. The system can generate these entries for your primary balancing segment, your secondary balancing segment, even your third balancing segment. Now, what is primary, what is secondary, what is third segment? We already covered as part of chart of account upload. So depending on your complete chart of account structure, you may choose what segment is appropriate for intercompany transaction to be tracked for. The important point here is enabling this option alone is not enough, meaning to fully use intercompany accounting functionality, you have to create intercompany rules. Okay? These rules tell the system which intercompany account to use, how balancing entries should be created, is there any clearing account, clearing organization in between, right? Which entities can transact with each other, etc. etc. So you just enable here, but down there are a lot of setups you have to do. Now next is reversal. Okay, so in reversal you have to choose your reversal set criteria. Okay? Then when you want those entries as a part of your period close to be reversed, that is the next option. Tick box, run auto reverse after opening period, and then synchronize reversal between primary and secondary. So let's go through each one of them. Sorry. So basically, this feature is used mainly for accrual journal entries, means accrual accounting method standard. Accrual journals are temporary accounting entries created at period end, or if you are using perpetual accrual, it happens every day as well. But as far as reversal is concerned, it is always period end. So this is mainly used for expenses and revenue that are recognized before actual payment, okay, are made, or receipts happen, means goods are received. Okay. For example, it could be a salary accrual, it could be expense accrual, it could be utility provision expenses, right? These accrual entries usually need to be reversed automatically as soon as you open the next accounting period. So when new accounting period is open, it automatically runs auto reverse process, and it will select the the general reversal set criteria to select a specific entry which must be reversed as soon as next period is open. The system will automatically reverse eligible accrual journal from the earlier period without requiring manual intervention, and this simplifies your month end and year end accounting operation. Now next is synchronize reversal between primary and secondary. So what is this? Now this option is recommended when the organization uses secondary ledger along with your primary ledger. So why secondary ledger are used? Secondary ledgers are commonly used to maintain your alternate accounting representation for management reporting, or to maintain different accounting standards, or to different reporting requirements of different localities or territory, and then additional currencies or local compliances need. The secondary ledger should always remain aligned with the primary ledger. So this option. So when this option is enabled, any journal reversal performed in your primary ledger automatically trigger reversal of corresponding journal in related secondary ledger. Why I say related? Because you may have more than one secondary ledger to your primary ledger. And why this is important? Because this helps ensure both the ledger remain synchronized. Why? Because this improves your transactional accuracy, consistency, accounting control across ledgers, right? So this is how we finish uh, the journal processing with balancing and entry level options, then reconciliation and input level options, and lastly intercompany and reversal options. And then I close this journal processing. So we have covered so far 1, 2, 3, 4, 5. Now second last is average balancing. Here many people, even consultants, sometimes are uh, you know want to know more about it. Why we enable for certain organization, why we don't. So I'm covering this in more detail. Average balancing processing is used by companies that want to track and report account balances based on average daily balances. I repeat, average daily balances instead of only period end balances. Why? And this is practice, standard practice for those industries like banking industries. There, financial services are there. There are investment organization, right? There are equity ventures. There is a whole big financial market out there, right? For them, it becomes very necessary to manage every closure of every account on day-to-day basis. So they maintain average balance. So when average balances are important for reporting and interest calculations, you can use this average balancing processing in order to track average and end of the day balances. I repeat, to track average and the end of the day balances and report average balance sheet and income statement and create reports using both standard as well as average balances. So when you enable this option, you can create report using your standard as well as average balancing. The most important thing to remember here is when you enable this option, okay, very important point. This option can only be enabled during initial implementation. Means now you are defining these ledger options and you are in process uh, whether to check this box or not. Okay. If you skip this, you won't be in position to enable again in future. This is one time setup. So you have to be 100% sure with your client what they want to do, right? And you should also be thoroughly, uh, you know, assess their needs, day-to-day needs as well as monthly needs, quarterly needs, fortnightly needs, half-yearly needs, yearly needs, financial needs, fiscal needs, everything. If you have better understanding of nature of a business of your client company, you will choose this option wisely and discuss it as a part of your workshop sessions, right? As part of your school, business school. So once we enable this and save the ledger setup, the feature cannot be turned off later. And then you also keep in mind when you enable this, this is not it. You also have to do other setups along with this setup to finally enable this average balance. For example, transaction calendar. What is transaction calendar? So transaction calendars define which days are considered as a valid business transaction days. So days which are considered in US might be different days which are considered here in India, right? We have different holidays, they have different holidays, right? So working days, so rather business working days is considered as a transaction calendar. Then net income account. So you also have to define this net income account. Why? Why it is important? Since you are maintaining your balances, right? Then you have to have the net income account defined for average balances to calculation or calculate to track your net earning activity. I repeat, why do you need this account? For average balances calculation to track net earning activity. Since you enabled this as an average balance. And then what about posting control? Why posting comes into picture now? Because it defines how journals can update average balance during posting. So you have to keep in mind that transaction calendar and accounting calendars are completely independent. Okay, the one which is used as a period opening activity, that calendar is different, and the transaction calendar is different. And this is very essential to maintain your average balances. And that's how we complete this option. So we covered why to enable, what to include, then why net income account is necessary, and transaction calendar, and then posting control as well, because it defines how journals can update balances when you post journal entry. So even it limits posting journal to with the dates on and before you are cut off, right? So this is important. Now I close since I've covered average balance. Now last option as part of specified ledger option is accounting and document sequencing. Now this ledger is for US companies, so maybe for them it is not mandatory, right? Then here, if you see, there are sequencing option available by ledger, legal entity, and no sequencing means you don't want to use. And then there is document sequencing. And in document sequencing, there are two options. Okay. Now, since it is no sequencing, it is grayed out, means you can't check it. So one is enforced document sequencing, another is enforced chronological order on document accounting step. So if I check this option here, ledger level, this two becomes enabled, okay? Or option two, make a choice. I will not make any choice right now, but I'm just telling. If I select the legal entity, then all the option become means you're tracking at legal entity. And if I check no sequencing, everything will become means no sequence is made. So you have option to maintain your accounting and document sequencing, ledger level and legal entity level. Okay. So what does it mean? Let's cover in more detail. So document sequencing is automatically or manually created to give a sequence, unique sequence number to your accounting document. Now this sequence number help auditors, your accountants, your company, right, senior people track transaction easily. So it is since it is a unique number, it is easy to identify transaction. Then it also helps us maintain audit compliance. Then ensure proper document control. And even it helps us meet statutory legal requirement in specific country where it's mandatory to use at ledger level or legal entity. So what is a document sequence? A document sequence is simply unique running number assigned to a document. So document could be your invoice, your payments, your journal, your vouchers. So even though sequencing is used in subledger level application, okay, you're using sequence where at subledger when you book supplier invoice, when you create invoice for your customers, credit memo, debit memo, right? There are various transactions happening at operational business unit level. Even though those numbers are created there, right? But this setups begins at this ledger level. Unless you enable this option over here, you won't be able to create those sequence document sequence at subledger level. So this is a mandatory setup here at ledger level. So most of the setups, which are very crucial and critical, must be enabled at ledger level first and then at subledger level. So this means the ledger controls how sequencing behaves across the application. Now sequencing by means by ledger or legal entity, right? We already have covered this part. Means either you sequence it by ledger. Means if you cover it by ledger, what happens? All the legal entities which belong to that ledger will have the same sequence, right? If you select at legal entity level, okay, so each legal entity might have a separate sequencing depending on the choice you make. Now next option here is enforce document sequencing, okay, and then enforce uh, the chronological order. So what is it? When this option is enabled, the first one I'm talking about, the enforce document sequencing. The system requires invoices and payment to have voucher numbers, means it is mandatory. It enforces. This means the transaction cannot be completed without sequence assignment. Every invoice and payment becomes uniquely traceable. So this improves your audit compliances of your company, finance control, and regulatory reporting. Now next option is enforce chronological order on your document date. So what is this? Now this option controls the sequence order based on document dates. When user save an invoice, for example, system checks accounting date on that invoice header. The new invoice date must be current or same or later than whatever it is for that. The latest existing invoice date for the same legal entity and document sequence. Suppose the latest invoice in the sequence has accounting date. Maybe today is the 16th of May 2026. Setup will not allow new invoice with 10th of May 2026. Means if the current accounting date is 15th already or 16th already, and if I go back and want to create invoice for 10th of May, then it won't allow me because it breaks chronological sequencing by date. So this option. So according to your business policies, rules, how you want to track your transaction, even your statutory requirement of your country and localization, if it enforces you to maintain in such way in chronological order, this option is viable. You can enable for your transactions. And why this is important? Chronological control prevents your out of order, you know, entries. Means all it prevents all your backdated transactions, and that's all it is. So we also covered sequencing part. So as a part of specify ledger option for this entity, I just open up all of them together now quickly. Uh, these are many options, and we have gone through each and every setup in detail. Okay, and here is so all the setup we have covered for this specific entity, financial services, US primary, ADB ledger, right from general information and all of the processing, period close, subledger processing, everything we have covered in detail. So thank you for watching this session and for your valuable time and attention. Stay tuned for more insightful session ahead. Good day to you. Thank you.